Hi, my name is Colette Rabba, and I'm with Realty. I'm a residential real estate broker in the GTA West, an income property specialist, and an investor myself. The reason why Araceli and I like to do this show is because we're both investors and we love to give great information to viewers and listeners just like you.
Okay, great. So welcome everyone. This is Araceli, Transition Wealth Advisor and Real Estate Investor, helping those of you who have believed that don't have a chance to get retirement because you are in your 40s plus. So there is a solution. So let me know if you need any help. I'm glad to help you. And today in my chat with Colette, I'm here to talk about a couple of real estate and finance terms. So Colette, can you introduce yourself and tell us what we're talking about?
Of course. Hi, everybody. My name is Colette Rabba. I'm a real estate broker in the GTA. I like to help people buy and sell their homes anywhere. I want to say Etobicoke all the way to Burlington and beyond. I love what I do, and I love our chats, Araceli and I, because we get to share information, and especially the ones that we do, the terms in real estate and finance are very important. So you don't feel when it comes time for you to sell or to have Araceli help you with your finances that you're not in the dark, you don't understand the terms, or you feel like you don't understand. So this way we like to have these little videos to explain things and really share information. So thanks for joining us.
Thank you, Colette, for being here. Okay, so what are the terms? So what are the real estate terms that you're sharing with us today?
Okay, I'm going to share my screen.
Okay,
and
there we
I have a
go.
little, we like to do our little presentation just to be able to, have a little visual at the same time as we talk. So we only have 3 really quick ones today. What we like to, and this is because people ask me too in everyday life, what does this mean? What does this mean? So I make a little note at the time and I write it down because if they're asking, I'm sure other people have the same questions.
Yeah.
So the first one, when people drive down the street and they see a real estate sign and they see exclusive listing, what does that mean? Also, when you're signing a contract, there's something called a holdover period. And with Araceli, we're going to talk a little bit about capital gains versus business income when you have an income property.
Yep.
So let's get started. So the first thing is an exclusive listing. Do you know what this means, Araceli?
No idea. I have seen them, but I would like you to help me out, find out exactly what this is.
Yes, it's a bit strange. And I have to be honest, I didn't know what it meant either before I got my license. And, I had to find out what it meant too. On the contract, right at the top, you'll see 2 areas. One will say MLS or exclusive. So exclusive really means that realtor that's signing the listing agreement with you for the seller has the only access, the only agent to not just sell the property, but also help the buyers on the buyer end. So they're the only agent. It's not on MLS. It will not be on the World Wide Web. It will just be, the marketing has to come from that listing agent. And the way they do it could be online, but not on MLS.
So Colette,
yeah.
what is the benefit of having that? Because if it's usually the MLS is the biggest database of properties, and most people, at least me, that's the very first place that I go to for looking for properties.
Exactly.
What is the benefit? What is the benefit of?
This is the funny thing. So obviously, if you are a business person, you understand I want the most customers to at least view what I'm selling so I can get the best, the right buyer to come in and buy this property in this case. Yeah. So it's funny though, because some agents will convince the seller that I have all these buyers in my pocket. I will take your listing and I will market it myself and I'll get commission on both sides. So really, if you are letting the listing agent, it's called double ending. So they have the listing the listing side of the contract and also the buying end of the contract. So generally speaking, you have 2 agents one is the listing agent, one is the buying agent, or when it's on MLS, you are inviting other agents to come and make an offer on the property.
Yeah.
So without MLS, that agent takes both sides, they manage both sides. Why someone wants to do that? Either the agent already has buyers that will come and make a reasonable offer, or something is with the seller. Maybe they don't want people walking through the house. Maybe they don't trust any other agents. Maybe there is, there are reasons why people don't want it on MLS. I really, in this day and age, can't imagine what they could be. But let's say it's an estate and there is a lawyer that wants to just get it done. So they say, whatever you want, this is an exclusive listing. And then that one agent controls everything. Sometimes the seller themselves are the agent. So maybe they just want to take all the commission, keep it for themselves. So if you ever see that sign and it says exclusive, you can very well call the number on the sign and say, why is it exclusive? What does it mean? And you'll get the backstory. So I personally never recommend it. The only thing if I would recommend to do an exclusive listing is if I have the listing with an MLS, or sorry, not on MLS, but with a website. And then that person can go, or that potential buyer can go to the website and say, okay, now I can see the house. Now I can book an appointment. I can do everything through here. Yeah. But it's still not.
I don't know if I would want to do that, but we just basically want to tell you what it means. And when you see it out there, and if you are going to be listing your house, just to be careful if somebody wants to offer you an exclusive listing.
Exactly. And they don't explain it to you. So always get the explanation.
Okay. So what is item number 2?
Sorry?
What is item number 2?
Yeah, so number 2 is something in the contract, which is called a holdover clause. So now the holdover clause, you can write whatever date you want there as a seller. So when you're writing a contract, let's just say for sellers at this point, to list your house. So this holdover clause means if I'm the listing agent, I have a contract date when the contract expires, but then I also have a holdover clause. So this happened because sellers, what they would do is, they would they would get their hands on a buyer through an open house, let's say, or through something. And then they would say to the buyer, hey, come back in 30 days. I won't have a contract anymore with this agent. We'll just do a deal together. And we don't have to pay the commission. So that was happening a lot. So I don't know which governing board, but let's just say AREA or CREA, which is the Canadian Real Estate Association, decided to put this holdover clause as a boilerplate in the contract to say, this listing agent has done the marketing for your house. They're owed a commission. So even if you sell the house after the contract ends, you still have to pay them within this holdover date. So you can write in whatever you want. With my clients, I trust my clients. They trust me. If they're unhappy with my work, I don't put like a 90-day holdover clause. If they choose to not work with me, then that's fine. But a lot of brokerages also say, we need this in here because they want to get paid as well. So generally speaking, that's what a holdover clause is. So you have to really pay attention to that date as well. But if you're honest, if the client is honest, if the agent is honest, there should not be any issue with that. And if you want to ever get out of the contract, it's a conversation to say, whatever happened, you've been not answering my phone or your phone or answering my calls. I want to terminate the contract. You can absolutely do that. You don't have to blame the holdover period on that.
Correct. So always remember that the best policy is to be honest and have good communication, because that's when you know if something is going wrong. And if you're not happy with your agent, you better tell them right away why you're not happy and what you want them to do differently. And if you cannot resolve that issue, then you have to probably dissolve the contract before ends up being in a really bad situation.
Right.
So anyway, that's great. So
Well, you'd be
thank
sorry.
you
I
for
was just gonna say,
clarifying that.
sure. I was just going to say one other thing. You'd be surprised at how many people, when somebody comes to me and says, "Oh, I had a realtor before and this and that, and things didn't work out." And I said, "Okay, well, what's the contract? Is your contract finished with that person?" And they say, "We don't know." I said, "Well, where's the paperwork?" They said, "Well, we don't have it." What?
Oh,
So this is the thing. What's happening in the industry? I sometimes I can blame the agent, but also it's your as a client, it's your responsibility to get copies of everything to
yeah.
understand what you're signing before you sign it. So please, whenever you have a contract in front of you, that's contract 101. You don't
Yep.
sign anything unless you know specifically what it means, how to get out of it, how long the dates are, and what it means to be in bed with this person or this brokerage, right?
For sure.
Yeah.
Okay, so
Okay.
that's
The third
great.
thing.
Thank you for clarifying that. Just make sure that you read your contract and that you pay attention to those two terms that we just talked about. The last
Absolutely.
term that I want to talk about today is two very different, distinct ways to report income when you have a property. And I'm referring to an income property because, at least here in Canada, when we have principal residence, we don't have to pay any taxes when it's sold.
Right.
Um, but in the States are different rules, okay, because you're allowed to claim something and then therefore you have to report that as income. But what I'm talking about here is an investment property. That means a secondary property that you buy, whether it's a single family home, a multifamily building, anything like that. And basically there's two ways to report income. One of them is capital gains, and the other one is business income when you do a transaction in real estate. And very quickly, capital gains is reported when you have usually a rental property. That means you're buying a property, you're renting it for a period of time, and you're going to sell it 2, 3, 4, 5 years later. And most likely, you're going to sell it for more money. So
Right.
you buy a property for, most likely, yeah.
Yeah.
Some cases you don't, but I would say the majority of the times you will have a gain.
Of
Okay,
course.
so if you buy a property for 100,000 and 5 years later you sell it for 200,000,
Yeah.
the gain is the difference, which is 100,000. Okay, so
Yes.
just remember that. And then normally, capital gains, you would have to add only 50% of the gains. In this example, the gains is 100,000, so therefore you would add $50,000 to your income, which you will be taxed at whatever rate it is.
Right.
However, business income, normally it's collected in a real estate transaction when you're doing a fix and flip. And that is a short term that could be from a couple months to up to 2 years. And
Yeah.
this is with the purpose. It has to do with the purpose, not so much with the time, because the purpose is that you're going to repair property that is never going to be occupied. And depending on the extent of the repairs that you're doing, sometimes it takes as long as 2 years, sometimes even more, depending
Right.
if you're building it from scratch or you are doing a complete reno that requires lots and lots of permits. So that's would be when you do it. So you buy the property, you put all the repairs and buy all the items, and then you sell it to either a final user or another investor. The difference that you make would be considered business income. And that means that you're going to add the entire amount. So if you buy a property for 100,000, you put $100,000 in repairs and materials and you sell it for 300. So that means you are making $100,000 in that transaction. Doesn't matter the time. You need to add $100,000 to your income. And that is the main difference between capital gains and business income when
But this
you're doing, yeah.
is this in Canada and the US or just
It
in
is in both. The only difference is in the principal residence because
right.
you are allowed to claim something in the
Yeah,
US versus here in Canada. In Canada, you don't need to pay anything. So,
right.
but that depends also by state. So that's what I don't want to mention it. I just
Yeah.
want to see that blanket statement.
So
So that's perfect. Yeah.
I think ultimately what we're saying here is please talk to your business tax accountant before you do either way. So when it comes to selling, then they know exactly what's the better. Obviously, to me, I think capital gains is way better to pay less
Yep.
tax, but not every case. So you really have to talk to a proper tax accountant so they understand
Correct.
and you understand, and they can have all the information right there, depending on how much you spend and how much, if you do even
Yep.
make an income while you're while you're flipping it, let's say, right? So, okay, I'm gonna stop share, or you stop share. Okay,
Yeah,
good. Right,
absolutely.
we're back.
Yeah. So the one thing that I just want to mention is remember, no matter what you do, whether you're holding a property or you're doing fix and flips, the main thing is that you have to look at your overall finances, because when you decide to claim whether it's capital gains or business income, you need to go on your overall finances, because you might have other income from other sources that is going to affect the entire you know, the
Of
end
course,
result.
of
So please
course.
talk to
Yeah,
your accountant. Make sure that you do have a wealth advisor that you talk to see what else is coming to you and what is the best way to do this for your specific circumstances.
exactly.
So I hope this helps. So just remember, there is we went over basically three things today. The first one was the holdover period, correct?
Yeah,
Uh, then the exclusive listing,
yeah.
and then what is the difference between capital gains versus business income when you're doing a real estate transaction. And I hope this helped you. And if you do have any questions or you want further clarification, please comment and let us know that you want more information. I will put another video for you.
Yes.
Okay, thank you, Colette, for being here. We'll see you at the
Thanks
next
everybody
one.
for joining us. Bye. Thanks for joining us today. If you'd like more information or if you have any questions, please go to my website at www.coletterabba.com.